Welcome to today's Silver Log. It is the 18th of April 2011, and for a while I've been doing this comparison with the rally that broke out in August of 2010 comparison, or compared with that of 1979 starting in January. And that rally lasted about a day greater than a year, 1 year. And that means if the rally is to continue on the same length of duration, then this one should make its peak towards August of this year. Within this chart, the green line representing what happened in 79 and the reddish looking line is the current variables. It's been over surpassing this consistently since here. So quite a few days it has done better than the trend. It's in the same sort of direction. And the reason why I ended it here was because that's right before the breakout. There was a nice little pattern stating, yep, up the market would be going, and it did. And what I'll do now is show this with a lot less candles. On September the 18th, 1979, silver closed at $18.30, gaining $4.90 or 36.6%. The matching date for today, for this tick to match right in here, would be that of Wednesday, April the 28th. That is 9 days from this broadcast. And we need to get to 54 for silver to reach this top line in here. When the candle started, or the very started here, this was March 21st, silver was 36 and silver was $9 at the start of this chart. Now, let's just take a look at this 36.6% number. Because with today's values at roughly around $42 per ounce, 10% of that is 420 even. So now we're looking at $14, $15 day gains to match what happened in here. We're going with previous history. If it happened back then, it's potentially possible to happen again today. And with gains of $15, that would not only take us to 50, but well above. But if anything, this may tell us that, okay, we come up to the 54, maybe even greater because we're over surpassing it to begin with. And then there's this big correction. If we match it completely, it means a move to 54, coming back to this line, which is pretty much where we are now. So a pullback from 54 down to maybe 42 or 41 as a possibility. And it keeps on exploding from here. It goes through a wild consolidation period. But what's interesting to note is when you have a big move, anything that's either upside, downside, 36%, 25%, anything massive, it always brings volatility to follow. Maybe not as big as the original move, and oftentimes not as big. But you don't go from having 1, 2, 3, 4% days, then having a 30% day, and then back to 2, 3, 4% days. That just doesn't happen. You go from having 40% day, then okay, now we're having a 7% day, 5% day, 9% day, some of them up, and of course some of them definitely down. Now, when we look back at 1979, this is what the monthly chart would have looked like at the end of August of 79. And I'm sure there would have been a lot of people in here saying, it's up too much. And this is the month before that 36% gain. Pattern of higher highs, higher lows, and it hadn't have touched this moving average since here. It hadn't went below the 18 period of lows since back in here. Every reason to be bullish. Now, when you see a chart like this, you don't buy here. If anything, if you're looking to buy, you shorten the time frame out. Okay, there's no buying setups on the monthly time frame. How about the weekly? Is there a buying setup there? Okay, how about the daily? How about the hourly? And so on. But it does show that, well, there's no reason the market has to go lower, although at some point it does. And at some point was obviously when it went up to $18. Now today we have a somewhat of a similar trend. Very bullish again because you're well above these moving averages. We haven't touched the 18 period of high since back here in 09. We haven't been below the 18 period of lows back since the market broke down in '08, and it really didn't break down because, in a sense, or using technical analysis, this was a failed move. And we know for sure it was a failed move because it broke below a significant support level, and it didn't successfully find resistance and break down. It found resistance, yes, but for this to be a successful move, at this point, it was critical and it had to fall here. It didn't. This told us we were going neutral, bullish. There's a breakout candles. Two great buying opportunities were here, and even again in here somewhere. So the volatility that we're seeing today on the intraday level, it's been fairly massive. Seeing moves of 10 cents in a second, very common, 7-8 cents in a second, 30 cents in 5-6 minutes. If we're going to be moving towards this massive volatility where we have these big moves, then there's usually precursors that will follow it. Now, there is a holiday on Friday. It's Good Friday. And we'll just have to wait and see, and I'll update more on this probably towards the end of the weekend. And have yourself a great day. Bye-bye.